Hey guys, it's Aman
And Christina
from Our Rich Journey. It is time for a stock portfolio update. You guys have been asking for this for quite some time, and so we are going to do it once again. We are going to take you into our stock portfolio to show you the performance of our investments. But at the same time, we are also going to answer your questions about investing. And on today's video, what we're going to talk about is Netflix and how to invest in a company like that has just experienced a huge one-day drop. In fact, Netflix fell over 35% in one day. This was a stock that at one time was trading above $700 a share. 6 months later, it's hovering just above 200. And so is this an opportunity to go in and start buying shares of Netflix at a discount? Well, if you are one of those people that have been watching stocks like this, waiting for the opportunity to buy them at a discount, this video is also for you because we are going to outline some tips that you should consider if you are planning on buying shares of companies like Netflix, PayPal, or Facebook, all companies that have experienced huge one-day drops in the stock market.
So if you guys have been following this portfolio, you know that in March of 2020, we invested $5,000 into this particular portfolio. It is now worth over $40,000. So what we want to do is open up our portfolio, show you what we invest in that portfolio, and also show you how each of those investments have been doing since March of 2020. But first, we want to answer the question of how do you invest in a company that experiences a huge one-day drop? And we have summarized this into 3 tips. So the first thing to consider is the company's fundamentals. Have the company's fundamentals changed? Now, when we're talking about investing in these particular companies, we're leading with the assumption that you already have these companies on your list. You've already been eyeing them, you're thinking about investing them, and for whatever reason, on a single day, the stock value just plummets. So what you want to assess is the fundamentals of that company. Since the time that the stock value plummeted, have the fundamentals of that company changed?
Now we're using Netflix as an example. In one day, the value fell by over 35%. Now this is because during its quarterly report, it reported that for the first time in 10 years, it actually lost subscribers to its platform. And the stock market beat it up because of this. So it's no surprise that investors did not like that news and the stock fell significantly. But what you have to do is assess whether or not this is a one-time event or has something fundamentally changed with Netflix and it's no longer a company of growth.
So what we mean by this is analyzing other factors that may be impacting Netflix's growth. When Netflix first established as a company, there was not a lot of competition. There were not a lot of big name companies that were also streaming different TV shows and different movies. But now there is a lot of competition with streaming platforms, and it calls into question whether Netflix can continue to dominate in its area.
So you really want to look at this quarterly report for Netflix to identify how they are going to deal with the competition, how they are going to strategically move forward to continue to grow. So let's say you've done that analysis and you want to move forward with buying Netflix or a company that has experienced a big one-day drop. Our next recommendation is to buy in slowly. And what we mean by this is instead of taking a lump sum of money and buying as many shares as you can because you think this company is on sale, we recommend going in and buying just a little bit at a time. In fact, we recommend dollar cost averaging into your investment.
Now, if you have watched our videos, you know that we are huge proponents of lump summing your money, getting your money into the market as quickly and as early as possible. But in this type of scenario, we are saying to dollar cost average. And we're saying this because with dollar cost averaging, it can help to potentially reduce some of the anxiety of you putting all of your money into an investment and then watching it continue to go down and down.
Now, we're not saying that Netflix will continue to go down, but we're saying that it will be on an emotional roller coaster for anyone that is investing a significant amount of money. We will also say that most of the time, when you see companies like this have tremendous drops, the sentiment around these companies tends to get very negative very quickly. Because soon after these drops, Everyone is coming out with negative news about these companies. We've seen this with PayPal and Facebook as other examples. Facebook fell over 25% in one day, and it continued to drop just based off of negative news that continued to pour in. In fact, it fell another 20% over the next couple of months. PayPal, the exact same thing. It had a huge one-day drop, over 25%, and over the subsequent months fell another 20%. So you really have to be careful about going in with a whole lot of money to buy up a company because you feel like it's on sale on this one day. There can be more drops, and that could put you on an emotional roller coaster.
And our final tip to you is to have an exit plan. We always talk about understanding how you put your money into an investment and how you ultimately plan to take that money out. So after you invest, what are your plans for selling that investment? Do you have a plan to sell after a certain profit? Or do you have a plan to sell to avoid a certain amount of losses? What are your parameters for selling?
Now we actually have one more tip, and it is to always invest with a plan. You see, whenever situations like this present themselves, they could be huge opportunities if you have identified them as a part of your plan. You see, you can't invest blindly and build wealth. You must be sticking to a plan. And so if you guys are investing now without a plan and you need help developing a plan of your own, you may want to check out our stock market investing course for financial independence and retiring early. In our course, we provide you with a 19-page investment plan that you can use to develop your own strategy. And so we'll leave a link in the description below for that course, or you can go to ourrichjourney.com to learn more. But without further ado, let's get into the update for our stock portfolio. Let's take you guys in and go over these investments.
So as we mentioned, we started this portfolio in March of 2020 with $5,000, and then every month around the middle of the month, we would add $1,200 to the portfolio and divide that money between 3 index funds. And this month on April 18th, we invested $1,200 between our 3 index funds. Let's start with our first index fund, which is the Fidelity Zero Total Market Index Fund, FZROX. On April 18th, we invested $720 and bought 46.753 shares at $15.40 each. We now own a total of 1,692.342 shares at an average price of $12.68 per share. Our total amount invested is $21,459.18. The current value as of April 22nd is $26,062.06, making this a total gain of $4,602.88, or 21.44%. Next is the Fidelity Zero International Index Fund, FZILX. On April 18th, we invested $240 and bought 21.898 shares at $10.96 each. We now own a total of 693.636 shares at an average price of $10.44 per share. Our total amount invested is $7,241.31. The current value as of April 22nd is $7,553.69, making this a total gain of $312.38, or 4.31%. And our last index fund is the Fidelity Real Estate Index Fund, FSRNX. On April 18th, we invested $240 and bought 12.665 shares at $18.95 each. We now own a total of 479.999 shares at an average price of $15 per share. Our total amount invested is $7,202.28. The current value as of April 22nd is $9,383.98, making this a total gain of $2,181.70, or 30.29%. Overall, our portfolio as of April 22nd is valued at $42,999.74. That's up $7,096.96, or 19.77%.
So that is our stock portfolio update. We are so interested in seeing how the International Index Fund performs over the next couple of years. With all that's going on in the world, it's going to be a great gauge for what it's like to invest in an international fund. And it's the reason why we added it to this particular portfolio. And so if you are interested in these investments and want to continue to see how they perform over the long run, make sure you give this video a thumbs up, subscribe to our channel, and join the journey.